Welcome to the Intelligent Investing Podcast, where modern portfolio theory can suck it. A student of the School of Graham and Doddsville and a clergy member of the Church of Warren Buffett. Here's your host, Eric Schleien.
Hi, this is Eric Schleien. You're listening to the Intelligent Investing Podcast, and today we have back on Jan Svenda, who runs the OTC Stock Manual, the Svenda OTC Stock Manual, and is an OTC investor. Welcome back to the show.
Hey, thanks, Eric, for having me back on again.
Yeah, for sure. And you want to talk about Calloways Nursery today, right?
Exactly right.
So it's funny. One of the very early episodes on the Intelligent Investing Podcast, we had talked about, not with you, but there was another guest who talked about it. So it's been a few years. So it'd be interesting to kind of hear about it now.
Yeah, sure. So this time it's Calloways Nursery, CLWY. It's actually probably the least obscure stock that I've talked to you about. Although I still feel that many people might not know about it and, as you said, might have forgotten about it. It actually does not involve shareholders having to crawl through a cave and uttering some magic words to get financials. You can actually just go to otcmarkets.com and see them. So that's a change when it comes to my picks. Calloway Nursery is a small chain of garden centers in Texas, and it has an activist investor in the management, which has been a good steward of capital in the past few years. So basically what happened was that this was kind of underfollowed, a stock, and not necessarily mismanaged, but, the management was not necessarily unlocking the whole value of the company. And so the original pitch was that Calloway Nursery was trading below liquidation value while the business was solid, right? Garden centers, profitable garden centers, and so on and so forth. And then new management came in and realized value, and the stock went from like $4 to $8. Right now, it's back at around $4, right? So where we're trading
right now, it went to
it
went from like $1 or something, or $1.50 or $2 to like $8.
Yeah. I mean, I guess if you had it like that early,
and that included, when I first started looking at it, it was like $2, and I kicked myself for not buying it. There was a Seeking Alpha article on it that showed the liquidation value, and that's how I discovered it. And then what you aren't saying is, with that $8 a share, there was also some special dividends along the way as well.
Yes. There was about 10% return or 10% more return if you add the dividends and so on and so forth. So yeah.
I just wanted to add that. So anyway, continue.
Yeah, sure. So right now it's back at around $4, where I learned first about it, and it is trading at around 33 million in market cap, while it's able to throw off like 3 million cash flow a year, free cash flow. This cash flow is backed up by real estate they own and a good balance sheet with just a small amount of debt. So they've been really kind of utilizing their balance sheet a bit better with the new management, and but they haven't over leveraged or anything like that. And they've been opening up new stores, I believe, as well. So there is a possibility of future improvements in the cash flow as well. So right now you're looking at like 10 times free cash flow, which might not be, eye-popping undervaluation, but you really are backed up with some proper real estate and a healthy business. And the reason why I talk about it now is because, of course, the shares are trading down because probably people think that the corona disruption could have an impact. And while certainly it probably will have an impact on the operations, I don't think it should be completely disastrous for them, to be honest. Again, there is very little leverage. The business makes sense. I don't think it's anything flashy that would come out of that would not be trendy after the coronavirus. And actually, there was a person who was commented underneath that Seeking Alpha article you mentioned, Eric, and that was very recent. And he said that the stores are okay apparently and are actually operating. Some are even hiring, according to what he said. Of course, this is a comment underneath the Seeking Alpha article, so please do your own due diligence. But it might be interesting to look at it again and to kind of reconsider, whether at $4 or, kind of near $5, it is not interesting opportunity to check out.
So let me ask you though, why buy a tiny little nursery company at 10 times, cash flow when there's probably higher quality businesses where you can get the same multiple for? Like what's in, obviously it's more obscure, but do you think it's really that interesting at 10x multiple?
I think that like you have the balance sheet that backs you up. So even though like, a lot of times the only thing you would have is really the multiple and cash flow, right? Mm-hmm. Like, okay, you own something because there is a cash flow, but here, there is the balance sheet that will provide downside protection in case something happens with the business. So that's probably the other thing, the one thing. And the other thing is that they are going to grow. They are trying to open new stores and so on and so forth. Who knows if they want to in the end exit the investment, the original investors. That might be also a possibility. So I think it's kind of like managed as this is a kind of like let's say a very unusual OTC stock in that it has an active management that is actually trying to create further and future value. So I think that's what makes it interesting, even though maybe the FCF multiple might not be the most undervalued out there.
And do you think the management would sell more of the real estate, like would sell any of the stores?
I am not really sure whether they've done any leasebacks or not to get some cash and to do something with it. But I think that they kept quite a bit of it. And that they would open the stores either through buying some new assets or that just leasing it. I'm not really sure, but I think like they did some leases as well.
Interesting. All right. Well, any other thoughts on Calloways Nursery?
I think it's just a good reminder that the OTC land does have normal operating
like normal real companies,
management, yeah, and also that again the financials are out there. You can kind of see what's going on, and I don't think that the downturn in the share price made so much sense, because back then it was trading at $8, and this is not as illiquid as some of the other names.
Or maybe $8 was just overpriced.
That's for sure. That's for sure. That could be certainly the possibility, but I think people were hoping for future value there, and so I think that it's just interesting to see the share price. Of course, people, please do your own due diligence, especially in the OTC world. It's not the same as the public listed market, but Calloways Nursery could be an interesting stock to keep an eye on.
All right, cool. Well, Jan, thank you so much for coming on. And for those interested in Jan's manual, we'll put a link to being able to purchase the manual and also links to all your web content as well on there in the show notes.
Yeah.
All right, cool.
Sure.
All right, thanks, Jan. Have a good day.
Thanks.
Yep, bye.
Thank you for listening to the Intelligent Investing Podcast with Eric Schleien. If you'd like to connect with Eric for questions, comments, feedback, ideas, or to inquire about being on the show, please contact Eric at intelligentinvesting@gmail.com. So, in the words of Charlie Munger, I have nothing to add.